Well, the rumors are true, and you heard it all across the country this morning as a collective sigh of relief, particularly from those who have variable rate mortgages and lines of credit. The Bank of Canada cut the overnight rate by half a point. So it came down 0.5% from 4.25% to 3.75%. So I will get into that as well. Look at the latest stats in the GTA and take your questions as always right here, right now on Live at Lunch. Thank you so much for joining me. I'm Lambros Demos on this beautiful sunny afternoon. And boy, wow, what an October, huh? Holy smokes. Um, it feels like July out there sometimes. And I'm not complaining. I'm not complaining at all. Some people might, but I'm not, even though I'm sweating buckets. But that's okay, because I know, and, if we blink, it's going to be freezing, and there's going to be snow on the ground, and then we got the cold to complain about. So you'll never catch me complaining about the heat, even though I'm melting. But that's okay. Speaking of melting, interest rates are. So they've come down now a whole half a point, which should make a little bit of an impact in the market. Not just the real estate market, but overall, it should stimulate the economy a little bit, which is what the Bank of Canada was looking for. If you recall, I didn't go live last week, but I did put out a post that inflation had come down to 1.6%, which is well below the 2% target that they were going for. So I'm sure that had a lot to do with their announcement today. But also, jobs are pretty steady. They were down at 6.6% or 6.7%, the unemployment rate. That's ticked up down a little bit to 6.5%. So they're looking at that as well. They're looking at a bunch of factors. And all that factored into their decision today to cut interest rates. This is like the worst kept secret ever. I predicted this rate cut, a 0.5% rate cut 3 weeks ago, if you recall. And lo and behold, they did cut it today. But they're not stopping there. I believe there's going to be more rate cuts coming. We have one more rate announcement in December 11th to be precise. And I believe there's going to be another rate cut there. I don't think it's going to be another 0.5%. It might be a 0.25% rate cut, but I'll get into that a little bit more in detail. Because Tiff Macklem, the governor of the Bank of Canada, even came out and said that there's going to be more rate cuts. So, and he's never admitting to anything like that. So, but he said there will be more rate cuts. The good news is he anticipates inflation to remain around 2% well into 2026. So for the next couple of years, hopefully, if he's correct, and if everybody, all the bigwigs up in the Bank of Canada are correct with their surveys and with their research and everything, they're expecting inflation to be around 2%. It might go up a little bit. I mean, last month in September, it was at 1.6%. I think it's going to inch up a little bit, maybe hit 1.9%, maybe 2%, something like that. But don't panic. It doesn't mean that they're going to increase rates again. It just means, and these things fluctuate, right? Inflation fluctuates. It's not always going to come down. If you recall earlier this year, it did the same thing. It came down to like 2.3%, then jumped back up to 2.7 or something like that. But it's going to go up and down. So, and they're expecting it to go up and down, which is the good news. So that's why they're not going to, make a knee-jerk reaction and just cut rates immediately or increase rates immediately. Hopefully, that's what they're doing, and they're not making these knee-jerk reactions to the inflation report, because you have to respect the lag. I think the biggest mistake Bank of Canada made was increasing rates too quickly. They probably should have started, earlier and increasing them slightly, but they increased them like from 0.25% in March of 2022 all the way up to 5% about a year and a half later. So that was crazy, and I think that did a lot of damage to people. But anyway, hindsight's 2020. everybody can, everybody is an armchair quarterback. I'm not pretending to be an economist or anything like that, but all I'm saying is respect the lag and learn from their mistakes. Hopefully, they will do that. But I think more rate cuts are coming, and that's all in order. So that's good. So what does this all mean? I mean, I'm talking about numbers, and it's probably going over your head kind of thing. What does this mean? So the overnight rate or the policy rate is now down to 3.75%. Okay, so you have to add 2.2 to that to get to the prime rate. So that's the prime rate is what banks use to determine their interest rates that they're lending out to people. So if you add 2.2 to 3.75, you get 5.95%. So that's the prime rate as of today. Now, from there, they determine what mortgage rate they're going to give you, what interest rate they're going to give you on the line of credit. And lines of credits are usually prime plus a half. You may have heard that term, prime plus a half, prime minus a half, prime plus one, prime plus minus two. But that's what this all means. So that's what they mean by prime. So prime right now is 5.95%. So prime plus a half means 6.45%. So they're adding half percentage point to the prime. So anybody who has a HELOC or a home equity line of credit that's at prime plus a half, you're looking at a drop from 6.95% yesterday to 6.45% today. So it came down 0.5% in line with the Bank of Canada's cut. So that's the HELOC rate right now. Variable rates, can be offered at different, prime pluses or prime minuses, depending on your, credit score, depending on your income, depending on your debt service ratios, all these things that they're looking at. But typically, they're probably going to be in the fives, right? You might see a variable rate in the 5.5 range or less, if you're lucky. And fixed rates as well should be coming down. Now, fixed rates aren't affected by today's announcement. Fixed rates are, a whole different animal. They're affected by the bond yields. I'm not going to get into that, but what I am going to say is that banks always want you, or they're trying to push you into a fixed rate mortgage product or whatever. So if variable rates keep coming down, so if the Bank of Canada keeps cutting rates and variable rates keep coming down, there's going to be pressure on the banks to offer you better deals or better discounts on these fixed rate mortgages. So yes, the fixed rates may be based on something else, but they can add a discount to it. They can finagle their way and give you a better deal on the fixed rate side. So don't be afraid to negotiate with your bank, especially now, because if you recall, they have eliminated the stress test for those people who are renewing their mortgages and switching lenders or looking to switch lenders. So before a few weeks ago when the announcement came in, if you wanted to switch lenders, like if you wanted to shop around on your renewal, you had to be stress tested again. So they would have to qualify you not only on your current rate being offered, but 2 points higher than that. So which was tough for people because that kind of handcuffed them to their current lender. And if they weren't happy with their current lender, they couldn't really go anywhere. And the current lender was smart and said, well, this guy can't shop around or this girl can't shop around. We're going to give her not our best rate, right? So now the power's back in the homeowner side or the mortgagor side, and you have more negotiating power. So shop around. If you have a renewal date coming up, a due date for your mortgage, sometime early in the new year, because I think this takes effect in December or late November, something like that. But anyway, if you from January on, if you have a renewal to your mortgage, shop around or negotiate with your bank. Tell them, look, I'm not happy with this rate, because they're going to try to automatically put you into a rate. And if you want to take it, great, just take it, and you don't have to hassle or worry about it. But if you want to shop around, if you're that type of person who likes to do that, by all means, you can do that. And you can tell the bank that, hey, that's great, thanks for the rate, but I'm going to look around, I'm going to shop around and see if I can get something better. And or maybe you can offer me something better. So if you want me to stay, right, kind of thing. So don't be afraid to do that, and don't be afraid to contact an independent mortgage broker, because an independent mortgage broker can do that negotiating for you. They can shop your mortgage around to different lenders, not only banks, but monoline lenders who offer very competitive rate. And what I mean by monoline is they do strictly mortgages. They don't do anything else. Whereas a bank will do all kinds of loans, but a monoline lender is only dealing with mortgages. So they can shop around. They got tons of different types of lenders that they can shop your mortgage around and probably get you a better rate. So now you can do that. It doesn't cost anything. If the mortgage broker asks you to pay a fee or a percentage, then run, don't walk away from that mortgage broker, and go to a legitimate mortgage broker or company, and they can do that for you. If you want any referrals to mortgage people, by all means, reach out to me. You can send me a DM, email, call me, text me, whatever you want, and I'm happy to provide you with some references. I work with a lot of great mortgage people, mortgage brokers in this industry, trustworthy ones and people who will do a great job for you. Okay, went off a little bit on a tangent there. Let's get back to this. Again, the tone of the press conference this morning after the rate cut was pretty optimistic. The Bank of Canada Governor, Tiff Macklem, said there will be more rate cuts. So I think there's going to be another cut in December. I think it's going to be a 0.25% rate cut, because I don't think they're going to go from a half point rate cut to nothing. And they're certainly not going to increase rates at this time. So I think they're going to cut it by a quarter point in December. That announcement is on December the 11th. And prior to that, we're going to have one more inflation report coming out in November for this month in October. I think it's going to be a little bit higher than 1.6%. We also have two jobs reports. And what I mean by jobs reports is the unemployment report is going to come out. Remember, that was at 6.5% last month. I'm not sure where it's going to be next month. But they're going to look at those two jobs reports. They're going to look at the inflation report. They're going to look at GDP. They're going to look at a bunch of things. And then make their decision in December. So, but their forecast, I think, is to stay on this path of rate cutting. So anticipate or expect, probably a quarter point cut in December. At this point, I mean, anything could change going forward, right? So if the economy changes drastically, something happens, whatever, barring all of that, if we stay on this path, probably see another small rate cut in December. Okay, so moving on. Unless there are any questions there, I'm happy to take them now. And again, feel free, if you have a comment or a question, by all means, post it here because you don't know who else watching has the same question or comment. So I'm happy to take them as we're going along. This is very informal, so you can ask it here. And I'm happy to answer it if I can on here. If it's something more personal or you want to send me a DM, that's fine. Do that as well, and I'm happy to take a DM question as well. But when you ask it here, you never know, like I said, who else watching has the same question. So, and you're helping others by asking questions. So, and there are no stupid questions. So please go ahead and ask your questions. All right. So moving on to the stats in the GTA. And this is something you're probably going to see realtors jump for joy for this because the market is showing signs of improvement. It's been pretty dead all year, mostly around the summertime as well. It's been dead. So August, September, no life there in the market. But now things are starting to come back to life. And I'm saying that because I'm seeing inventory come down and sales go up. So that means the market's tightening a little bit. It means buyers have more confidence. They're going out there and they're starting to buy things again. So for example, in Toronto, we saw new listings come down about 21%, whereas sales volume went up 38%. That's a huge difference. That's a huge gap. So the market is tightening there. But at the same time, the number of showings, so the number of people going out to look at these properties, remained more or less the same. So it only went up about 2%. So despite the fact that inventory came down 21%, showings went up slightly, about 2%. And the number of offers went up 22%, but the number of sales went up 38%. So more people are confident in putting in offers. There's more sales happening. So the market's getting tighter in that respect. And this is due to a lot of pent-up demand. if you've been watching my lives, over the weeks and months, I've been saying there's been a lot of pent up demand in the market lately, but people just weren't pulling the trigger, so to speak, because the showings were up there. The showings were always high. It's just that things weren't selling yet. I mean, and the offers were going up slightly, but the number of sales wasn't happening until right now. And this, I'm talking about the first 3 weeks of October. Obviously, we're at October 23rd right now. I'm looking from October 1st to October 22nd and comparing it to the first 3 weeks of September. So September 1st to September 22nd. And this is the biggest difference right now is we're seeing sales volume go up and inventory come down. Similar story in Mississauga, or Peel region rather, Peel region including Brampton, Mississauga, and Caledon. The number of listings, new listings, came down 21%, same number as Toronto, whereas sales volume went up about 33%. Showings went down a little bit, surprisingly, around 2%. So again, I'm going to call it flat. So showings were pretty flat in Toronto and Mississauga or Peel region, but sales went up, and the number of offers went up about 24%. So we're seeing this now. I like to look at something called offers to sales ratio. So when you have a high offers to sales ratio, it means a lot of these offers are either tire kickers, or they're shooting in the dark, or there's a lot of competition. But that's not the case now because the market is slow. So it was a lot of tire kickers before, putting in offers, hoping something sticks. It doesn't stick. The sellers were pretty stubborn, and now they're not. So either the sellers are capitulating to these low offers, or buyers are anteing up their offers. And that's why we're seeing more sales happen. Which one it is, I'm not sure. If it's the first one where sellers are capitulating, then we would see prices, the average price, come down. So we'll know more at the end of the month when the full stats come out for October. We'll know which direction it's going. But if sales volume was constant or going up, then we know that buyers are anteing up in order to get these sales done. So as I said, offers went up about 24% in Peel region, and sales volume went up about 33%. And overall, there's more sales than last month, at least for the first 3 weeks. This speaks to the pent-up demand. Even though, and this is what makes it even more interesting and the numbers even more convincing, is that we had one extra Sunday in September. So in the first 3 weeks of September, we had 3.5 weekends pretty much, whereas in October, we only had 3 weekends. And weekends are generally more busy than weekdays for people to go out and look at places and put in offers and get all that stuff done, especially Sunday. Sunday's a busy day in real estate. So to have one extra Sunday in September and still have sales go up in October, I mean, that's a huge thing. So it means that these numbers are probably even more significant. And we'll know more again at the end of the month. And it will likely continue to trend up, especially with today's large interest rate cut and more rate cuts coming. I expect to see the market pick up even more. So I think it's going to be a very busy winter, especially if my prediction is correct and we do have another rate cut in December. I think it's going to be very busy January and February. Not as busy as we saw during the pandemic where people were going nuts, but I think it's going to be a busier than usual winter here in the GTA. So expect that. So if you're thinking of selling, it might be a good idea to get your house on the market before the spring market. Spring usually market starts mid-March to April, and then May is the peak. But if you get it out in January or in February, before the big rush, you're going to be the only show in town. So that means all the buyers are going to flock to your property, and you're going to have an advantage if you're a seller. Contrary, if you're a buyer, now is probably the time to get in, because buyers and people in real estate are followers. So once they see the thing starting to sell, they're going to jump on the bandwagon as well and start buying stuff too. So a prudent buyer would get ahead of that. Okay, I think it's the Warren Buffett quote: "When people are greedy, be scared, and when people are scared, be greedy." Right now, people are still scared. Scared, I mean, to commit to anything. They see prices coming down. Oh, sorry, no, interest rates coming down. So they're waiting until interest rates continue to come down, and they're waiting for more rate cuts. So they're still waiting on the sidelines. So they're scared to pull the trigger right now. But a prudent buyer would jump in right now, especially with a variable rate mortgage, because then you know that regardless of the rate you get now, it's going to continue to come down over the next few months. And contrary to that, you know, once people get greedy and start buying stuff, that's the time to back away, you know, because the only good thing that's going to come out of that, well, I don't know, good from the seller's perspective, is that prices are going to go up. So if you wait too long before, when interest rates come down and everybody comes into the market, then guess what's going to happen to home prices? They're going to go up. So you're not really gaining anything by waiting. So that's my 2 cents on that. If anybody else has a different opinion, by all means, you can you know, make a comment here or ask a question. I'm happy to discuss it. I'm always looking for different opinions. Happy to talk about that. And if there are no other questions, then by all means, I hope everybody has a fantastic day. Enjoy this beautiful weather because it's not going to last. You know, next week we're probably going to be freezing again, and it's going to be crummy, miserable, rainy fall weather, typical, not like it is today. So, so get out there, enjoy it while it lasts, and I'll see you all next time.